Egrag Crypto remains bullish on XRP because of this major milestone. Now, imagine an internet where your computer doesn't just browse the web, but actually earns its own money, hires other computers to do work for it, and settles the bill in less than 5 seconds without a single human being pressing an authorization button. This isn't a concept for the next decade. It is happening right now on the XRP Ledger. While the vast majority of retail investors are staring blankly at daily price charts, pulling their hair out over short-term fluctuations, a silent structural revolution just crossed a massive threshold. We are tracking a milestone that proves the entire architecture of global finance is shifting beneath our feet. A prominent market analyst here has just pointed to a data point that changes everything. If you've been wondering why some macro observers remain rock solid in their conviction despite months of downward price pressure, the answer isn't found in retail hype. It's found in the machines. So let's break down exactly what just went live and why the foundation is being poured for a massive utility paradigm. So let's start with our very first question about what is the x402 protocol milestone that has analysts raving. So let's look directly at the data that triggered this discussion. The prominent market analyst Egrag Crypto right here highlighted a staggering milestone, which is a 1 million agentic payments have successfully moved through the XRP Ledger using the newly integrated x402 protocol. To put that in perspective, we aren't talking about 1 million retail traders buying or selling tokens on an exchange. We are talking about 1 million independent autonomous transactions executed completely by software. The analyst explicitly stated that this milestone isn't just market noise. He called it infrastructure being tested, used, and scaled. While the average spectator tracks short-term price swings, the real story is developing quietly underneath the surface. This milestone is tangible proof of payments, automation, real utility, and institutional grade rails coming together simultaneously. According to the analyst, we are watching the Internet of Value take physical shape, noting that the XRP Ledger is not waiting for the future. It is building it. Now here's my opinion. My take on this is simple. Infrastructure always precedes the parabolic move. Think of it like laying down high-speed fiber optic cables across a continent before the internet boom. The average retail investor looks at the lack of immediate price action and calls it a failure, completely missing the fact that 1 million automated validation points mean the network is actually functional. So to me, this milestone shows that the network is graduating from a speculative asset to an industrial utility built. Now, how does the x402 standard power machine-to-machine commerce? So to understand why this milestone is turning heads, we need to look at what the x402 standard actually does. The x402 protocol is an open payment standard designed specifically to let artificial intelligence agents pay for digital goods and services autonomously. In a traditional setup, if an AI needs to access data registry, run a complex computation, or to trigger an API call, it hits a wall because legacy payment methods like credit cards require a human to fill out a form, handle a password, or sign a bank authorization. Now, the X402 protocol revives a deeply technical piece of web history, and that's the HTTP 402 payment required status code. That allows service to issue a direct financial demand to an AI client. Thanks to recent ecosystem integrations, the XRP Ledger natively supports these x402 powered automation systems using both XRP and Ripple USD stablecoin. Because the ledger settles transactions in 3 to 5 seconds with predictable transaction cost of fraction of a cent, it provides the perfect frictionless ecosystem for automated software to execute microtransactions at scale. Now, here's my opinion. The implications here are absolutely massive for the token's long-term velocity. Humans are slow. We buy a coffee once a day or pay a subscription once a month. AI agents can transact thousands of times per minute. By opening up the XRP Ledger to machine-native commerce via x402, you aren't just onboarding new users. You are onboarding an entire digital workforce that requires continuous, ultra-fast liquidity. So my view is that this utility creates a fundamental flaw that speculation alone could never replicate. Now, why is the community fractured over this technical achievement? Despite the sheer scale of 1 million automated transactions, the broader crypto community remains deeply divided, and the reactions on social media reflect a massive disconnect. When the analysts shared this data on X, a wave of skepticism immediately flooded the comments. One user flatly called the technological milestone being boring. It's boring. So let's highlight this part, the word boring, right? Another argued that none of these operational milestones matter if the token value isn't actively moving up, claiming that price is the only metric that carries any real validity in the crypto market. However, the sentiment wasn't entirely pessimistic. Other participants looked at the operational data and saw an accumulation window. One commenter openly asked whether the digital asset would continue its current decline, expressing hope that the valuation might drop below the $1 mark, so they could acquire more tokens at a heavy discount. Interestingly, the analyst himself agreed with this long-term outlook, revealing that he is already actively accumulating at current market rates while simultaneously keeping capital ready for any potential drop below $1, utilizing a strict dollar cost averaging his strategy. Now, here's my opinion. This divide highlights the classic battle between short-term traders and long-term accumulators. The retail crowd wants immediate gratification, where they want a tweet that pumps the price by 20% by tomorrow morning. But real wealth in this space has always been built by identifying network adoption before the market prices it in. When I see an analyst openly welcoming a potential dip below $1 to accumulate more, while the network handles millions of transactions, it tells me that the smart money is completely detached from the short-term panic of the crowd. Now, can infrastructure growth explode while the price continues to drop? This current market scenario brings to light a massive, awkward tension dominating the digital asset landscape right now. On one side of the ledger, actual infrastructure adoption is climbing at an exponential rate. On the other side, the market value of the token has spent consecutive months grinding down, refusing to mirror the network's underlying growth. The widening chasm between rising network utility and falling asset price is the exact anomaly that market analysts are trying to highlight. The core argument being presented isn't that the token is going to enter a vertical rally tomorrow morning. Instead, the thesis rests on the reality that the structural foundation supporting the network is growing stronger with every single block generated. Whether a metric like 1 million automated agentic payment turns out to be a minor footnote in history or the bedrock of a multi-trillion-dollar automated economy depends entirely on the network's ability to maintain this operational momentum as more enterprise applications go live. Now, here's my opinion. This divergence between utility and price is actually a gift for patient market observers. Markets can remain irrational and detached from reality for a long time, but eventually utility demands valuation. If a network is clearing millions of autonomous financial settlements, it is generating genuine economic demand for the underlying asset. So in my view, watching the infrastructure expand while the price dips is the ideal setup for anyone looking to build a position before the broader market finally wakes up to the machine economy. And now, here's our overall conclusion. When you stripe away the daily market noise and emotional commentary on social media, the data reveals a stark reality, where the XRP Ledger is actively transitioning from a purely speculative retail playground into a highly functional, machine-native settlement network. The achievement of moving 1 million autonomous agentic transactions via the x402 protocol is an operational milestone that cannot be fake or hype away. While retail participants argue over short-term charts, the integration of automated AI commerce introduces an entirely new tier of transactional velocity to the ecosystem. For patient market observers, the current disconnect between a declining token price and expanding industrial utility represents a classic accumulation window. The infrastructure is being built. The machines are already utilizing the rails, and the long-term foundation of the Internet of Value is quietly solidifying. And this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.